Solana has been one of the most talked about projects during last year's bear market, bringing a lot of hype and gaining a lot of new investors, most of whom were newcomers to the market altogether. The token has seen one of the most dramatic increases in price of all time, becoming one of the top cryptocurrencies by market cap in just a matter of months. However, as the hype has started to disappear and the crypto market began to go down, many controversies have shown up regarding the project and its future. In this video, we'll take a look at what Solana actually is, what it aims to do, and see whether the future looks bright or not for this hyped up cryptocurrency. Solana came to life in March 2020 when its first block was created, but the project was actually founded as an idea much earlier. In November 2017, Anatoly Yakovenko published a white paper for Solana describing the blockchain as using a proof of history consensus mechanism. After its official release in 2020, it has gained huge popularity really quickly, raising over $300 million in a founding round led by Andreessen Horowitz in June 2021. Solana achieves consensus using a proof of stake mechanism in its model known as proof of history mechanism. Proof of history enables the network to operate faster because nodes do not need to communicate to validate a block. The Solana white paper describes the design as a decentralized clock. Proof of history enables network participants to have a high degree of certainty that an event took place at a specific moment in time. An example of proof of history is when a person takes a picture of today's newspaper with the date and time recorded so that it can be used to verify the newspaper in the future. Like various other blockchains, Solana can run smart contracts. Solana's execution environment is based on eBPF, which allows the Rust, C, and C++ programming languages to be used. This ability to run smart contracts places Solana in the same category as other major blockchains like Ethereum or Polygon, and this enables it to have many utilities for its users. By letting anyone build on their blockchains, these projects create what is called an ecosystem and refers to the multitude of dApps or decentralized applications that run on that particular blockchain. Users can buy and sell NFTs, for example, which use this blockchain as a host but are actually provided by third parties, so they have nothing to do with the original founders of the Solana blockchain. However, all this hype and the huge number of investors brought controversies as well, as the people in charge of the blockchain apparently hid sensitive information from the public eye. This led to legal problems which of course dragged the hype down and slowed the development of Solana, while also contributing to the overall feeling of discouragement since the market had already started to go down from a couple of months prior and many projects had already gone bankrupt, losing clients' funds in the millions. On the 1st of July 2022, a class action lawsuit was filed against Solana. The lawsuit accused Solana of selling unregistered securities tokens in the form of Solana from March 24, 2020 onward, and that Solana deliberately misled investors concerning the total circulating supply of SOL tokens. According to the lawsuit, Anatoly Yakovenko, the founder of Solana Labs, lent a market maker more than 11.3 million tokens in April 2020 and failed to disclose this information to the public. The lawsuit claimed that Solana stated it would reduce the supply by this amount, but it only burned 3.3 million tokens. Similarly to the XRP lawsuit, this could have major consequences not only over the blockchain and its token, but over the entire crypto market and its future. To better understand what the lawsuit means, let's go into a little bit of detail and explain what was actually wrong with Solana's modus operandi. The lawsuit was filed against Solana Labs, the Solana Foundation, Solana Labs CEO Anatoly Yakovenko, the venture capital firm Multicoin Capital, and its CEO Kal Samani. Filed by lead plaintiff Mark Young on behalf of all investors who purchased Solana tokens, the suit alleges that Solana Labs negotiations prior to their initial coin offering, ICO, the crypto world's equivalent of an IPO, constitute multiple violations of the Securities Act. Deploying the Howey test, a court precedent for determining whether something is an investment contract, the suit alleges that SOL is an unregistered security. The suit claims that defendants used a series of negotiations to sell lots of SOL among themselves at rock bottom prices, and then chose to sell relatively few SOL at much higher prices during the public ICO in order to maintain control over the platform before dumping SOL on gullible investors. The core questions in the lawsuit relate to both the specifics of Solana and the crypto investing in general. The complaint alleges that Solana creators used a series of private deals and their ICO to deliberately centralize and consolidate control of both the tokens and the network infrastructure. Many have criticized Solana for its centralization. Its network and governance structure make it possible for some stakeholders to have more power than others. The lawsuit could have major implications for retail crypto investing. Any class action lawsuit hitting the developers of one of the top 10 cryptocurrencies will turn heads, but one thing about this case that has particularly concerned people is that it rests on the argument that Solana is a security. This is a problem that has been concerning the crypto market for the past few years, and everyone is waiting for an official response, as the result would transform the crypto market once and for all. Other major crypto assets have been involved in similar problems, and the appearance of similar lawsuits only raises more uncertainty for crypto investors. Ripple, for example, is already embroiled in a similar lawsuit with the SEC, and legal experts involved in that case are already warning that if Ripple loses, the case could transform the crypto sector. If you wanna find out more on that though, we have a video explaining everything that's going on with XRP and the lawsuit it's been facing. The Solana suit is hardly breaking new legal ground. As of May 2022, there had been at least 200 lawsuits concerning cryptocurrencies, many of which allege that crypto creators defrauded investors by illegally selling securities. Though the initial complaint never specifies whether the plaintiff was an accredited investor, Young purchased more than $117,000 worth of Solana in August August and September last year via altcoins such as Cardano and Ethereum. While nobody wants to watch a $117,000 investment plummet in value, it is also probably more than most retail investors are able to invest in crypto. The complaint's emphasis on the defendant's use of Twitter to promote Solana also suggests that a plaintiff or others in the class of plaintiffs might have influenced their investment decisions. No matter how this lawsuit turns out, this is a great occasion to remind yourself that all investments carry risk, crypto is highly volatile, and you should only invest in proportion to your risk tolerance. However, this doesn't mean that the technology that all these blockchains bring to the table is not useful and that you should avoid participating in it altogether. NFTs, for example, have created a craze in the summer of 2021, and even though at the moment many of them have no real utility, major companies in the world are joining in building the upcoming metaverse, and technologies like NFTs will play a central part in all these. These future digital environments will need to use blockchains like Solana or Ethereum, and users will pretty much see themselves with no option other than becoming part of these ecosystems if they want to engage in these experiences. However, if you want to find out more on that, you should go watch our video on that next.